Hi, I'm Alex Pollock, Chief Investment Officer of Loftus Peak. Welcome to our Update Plus, a short tour around the grounds of investment in the big disruptive trends that are driving business. 2022 was a difficult year for Loftus Peak unit holders as the extent of the market-wide multiple contraction was far greater than we expected. But the news got better in January, and unit holders of the fund enjoyed decent performance in February as well, with a lift in share markets over the past 2 months, reflecting the softening outlook for future rate hikes. Part of the disappointing 22 came because of Netflix, which was forced to re-examine from first principles its business after reporting its first ever quarterly subscriber loss. Investor confidence in the streamer caved. But this year, the company added 7.7 million new subscribers, far ahead of the 4.6 million expected, showing a re-acceleration in the rate of subscriber growth. The newly announced ad-supported tier broadens Netflix appeal, which is driving new subscribers without cannibalization of existing standard and premium users, a very strong outcome for the company. The streaming prize is large. Nothing less than a position in television globally is at stake. And Netflix, as the only large profitable global streaming service, is extending its lead. By way of illustration, Peacock's recent 5 million subscriber growth to 20 million is built on fickle sports fans, largely from the Football World Cup. Disney continues to face negative earnings margins in streaming. Warner Brothers Discovery is also flailing, having just licensed a chunk of its content to Roku. Megadata and the cloud. It is too early to pick a definitive winner out of the generative AI intelligence providers. All we know for sure is that the picks and shovels, semiconductor companies, providing the grunt to these services, will sell more chips irrespective of who wins. We are well positioned for this, with substantial holdings in makers of leading-edge hardware through our holdings in AMD and NVIDIA. Loftus Peak holders will be familiar with the fund's holding in the 3 largest cloud hyperscalers: Microsoft, Alphabet, and Amazon. These companies have built cloud infrastructure and platforms needed to provide data storage and applications at scale everywhere, which are increasingly a prerequisite as the only viable means of applying deep learning methods to train AI models such as ChatGPT and Google's Lambda. As of 2022, these big companies' quarterly revenues stood at $20.5 billion for Amazon, $12.9 billion for Microsoft, and $6.9 billion for Alphabet. One example of the scope of use cases for AI is advertising. Generative AI has the capacity to synthesize and tailor-make advertisements in real time, a boon for industries such as real estate, where copy has been somewhat produced artisanally. Even if the advertisement is not immediately as good as that produced by a human, the potential scale of production far outweighs the qualitative shortcomings as models improve. So far, Microsoft and Alphabet are competing over search users, enticing them with different AI chatbots to funnel users towards each of their different companies. But there are many more applications yet to really hit the headlines, such as in financial modeling, generating one-click legal actions, etc. These have not yet caught the attention of investors. There is more on this in the website, which we have just from a webinar which we have just run on March the 15th, and the video which is available on the website. Thanks for your time. You can see more content on this website, which has been updated recently. This is Loftus Peak's Update Plus. I'm Alex Pollock, Chief Investment Officer. Thanks.